All right, everybody, I am going to go ahead and start with today. So thank you for joining us for today's webinar, Cyber Insurance Reimagined. Welcome to Invision Cyber, coverage that matches your security investments. I'm very excited to be moderating today's panelists, and we will get to them in just 1 second. So we've got Mike McLaughlin, co-leader, attorney with cybersecurity and data privacy with Buchanan, Ingersoll, and Rooney. We've got David Anderson, Vice President, Cyber with Woodruff Sawyer as our broker. And then we have Stu Essex and James Ingram from Invision Cyber, our partners. And then my colleague Vince Kearns will be helping me with answering any questions that any of you may have during today's session. So I just want to encourage everybody as we walk through today's session. If you've got questions as we're covering content, please feel free to ask questions in the chat window and or in the Q&A session. Vince will be monitoring that for us, and we'll be bringing those questions up to the panelists as we go through. We, of course, will have time at the end of today's presentation to also answer questions. And with that, we will move over to today's agenda, and I will let our panelists give a brief introduction for each of themselves. So what we hope to cover today and what we look to cover today are the state of the market, a look at today's cyber insurance landscape, and I do apologize, I am a bit under the weather, so I'm not at 100%, so please forgive me. We also look to understand the evolving nature of cyber risks and how to adjust your strategies to stay ahead. We want to uncover critical underwriting security controls and the coverage pitfalls to avoid. We also want to understand the standard breach response process as it is today and how Invision's incident response process is different. And then we want to welcome our new partners, Trend and Invision, the new approach to insurance. We also want to show the cyber insurance integration we have with Trend Vision 1, and then also wrap up with a few questions and a few highlights from today's session. So with that, I am going to kick it off to Mike McLaughlin to introduce himself, and we'll move down the line before we launch into the cyber risk landscape.
Thanks so much, Lonnie. As Lonnie said, my name is Mike McLaughlin. I co-lead the cybersecurity and data privacy practice group at the law firm of Buchanan, Ingersoll, and Rooney. I'm based out of our DC office, but we've got 17 offices nationwide and 475 attorneys. We are very much a national law firm offering just about every type of legal service that you can imagine. And as a result, we handle incidents across just about every industry. And it's everything from business email compromise to complex ransomware incidents, all the way to advanced persistent threats targeting critical infrastructure. The team boasts a number of attorneys from a variety of backgrounds, including government, U.S. Cyber Command, the National Security Agency, as well as a host of others. And so really looking forward to being here and discussing all of these various risks and threats with all the other panelists.
All right, Stu, I'll turn it over to you.
Okay, thank you for that, and thanks, Mike, and thanks, Lonnie. So my name is Stu Essex. I'm the managing director and co-founder of Invision Cyber. We are a new cyber insurer, and I'm pleased to say we're backed by 100% Lloyd's Security, which is a real validation of a new product that we want to bring to the market that really looks at a slightly different way, a fresh perspective on how we can underwrite cyber insurance and how we can assess risk. And later on in the webinar, I will talk you through a little bit about why Invision and what we're bringing to the marketplace and how it might appeal to you as customers of Trend Micro. Thank you.
Thank you, Stu. James, on to you.
Hi, everyone. I'm James, CTO and Senior Underwriter for Invision Cyber. My background is on the engineering side. I started my career as a network engineer close to 20 years ago, and I moved quickly into the kind of cyber roles. And the past few years I've spent in the insurance sector, providing underwriting teams with technical risk advice. So I'm pleased to say I'm now working with Stuart at Invision and looking forward to bringing the product to you.
Thank you so much, James. And last but not least, my pal, David Anderson, I will turn it over to you, my friend, before you launch into the risk landscape.
Sure. Thanks so much, Lonnie, and thanks to the Trend Micro and Invision team for having me. As Lonnie mentioned, my name is David Anderson, and I work for Woodruff Sawyer. Woodruff Sawyer is a 108-year-old commercial insurance brokerage that was founded in San Francisco, California, but now has offices and a footprint worldwide. My specialty and focus is leading the Woodruff Sawyer cyber team on all things privacy, data breach, ransomware, and cyber insurance related. And so we advise clients from venture-backed startups to Fortune 10 on how they can understand and quantify their cyber risk, tell an effective story to their insurers to get the best coverage in place, which I'm sure Stu will help us understand later how they do this so well. And then most importantly, get them fit for purpose, deliberate coverage so that it addresses their own unique risks. So we work with our clients from start to finish on all things cyber insurance and cyber risk. Happy to be here, Lonnie. Thank you.
Thank you so much, David. All right, with that, I will flip over to your first slide.
Thank you. So, Mike and I think are going to tag team the first half of this presentation only because he sees just as much of the real world events and threat vectors that we see on our book of business as well. I will tell you that from an insurer perspective, Lonnie, and to the audience that joined us today, ransomware continues to be the largest driver of loss on underwriters' books. It tends to be industry agnostic in terms of everyone's getting hit, although there are industries that are certainly more targeted and more profitable for the threat actors, either because of the value of the information on their networks or the inability to have best-in-class detection, response, and risk mitigation from a ransomware attack, which leads to the threat actor being able to cause damage and extract a payment. What you see in front of you here is just a bar chart of the average ransom demands by industry. We can also confirm that the industry verticals that we've been talking about for years continue to be the top targets. Healthcare continues to be the top target by a long shot in terms of ransomware attacks. Education and nonprofit, manufacturing, and construction. Those three, I think, are very interesting because they have so many security challenges. Education and nonprofit from a budget perspective, but also from a threat landscape and surface attack area perspective. And then manufacturing and construction, there's just so many old components involved in those networks, whether it's IoT devices or the edge computing, the far reaches of network that are vulnerable. So those continue to be desirable targets. And then legal and government, I think importantly, because the data that they hold and because not always legal and government, especially in municipalities, are not always as aggressively forward thinking about cyber risk management. Mike, before we switch to slide, was there anything you want to talk about anecdotally about what you're seeing from an industry perspective? Who's getting hit hardest? Who's suffering the most from these attacks?
Yeah, I do. And actually, I think this bar graph tells a really interesting story. And it's something that we've seen pretty significantly, or a pretty significant change over the past year to 18 months. If you look at the very bottom of this, and these are what it's showing you are the ransom demands. These are the initial ransom demands by industry that are coming up. And you see energy and natural resources, retail, and legal and government being the highest initial demand. Now, historically, you would expect things like healthcare, where there's a lot of protected health information and other confidential data, or logistics or technology, things where there are going to be trade secret protections. The reason why we're seeing government, legal and government as professional services, and then also as government entities, retail and energy natural resources going up so significantly, it's because of the amount of investment that a lot of these organizations are putting into their cybersecurity. The bad actors know exactly where to go in order to extract the most that they can. And also those that are going to be most susceptible to significant business interruption and loss. Historically, when we looked at confidential information, it would be if your data is stolen, it goes on the dark web, it gets leaked, someone wants to pay in order to prevent that from happening. Now with class actions kicking up the way that they have, and where you can almost guarantee that you're going to get hit with a class action lawsuit if you suffer a data breach of more than 1,000 people. Historically, it was 100,000 people. But now we're seeing solicitations go up for just about every data breach, every ransomware incident that occurs. Healthcare is no longer paying the ransom because they're keeping that in their war chest. They know if the data leaves their network, it's like closing the barn door after the horse has already left if you pay the ransom. And so healthcare organizations and entities are no longer making that payment. So now the ransomware actors are looking where they can extract the most money. So they're going for legal and professional services where you have an obligation to the data, or where there can be significant other types of legal liability or third-party liability. They're going to local governments and municipalities because there's just not a lot of barriers to entry there from a threat actor perspective, because the budgets are not meeting the threat. And then they're going to things like retail and natural resources, or I'm sorry, retail and critical infrastructure. If these systems go down, the business interruption, the long-term impact is significant. And we saw this recently in the UK when a major retailer went down, and the amount of business interruption it had and the loss in revenue as a result of that. And then in critical infrastructure, imagine what happens if you have a pipeline in the East Coast go out for any period of time.
You don't say.
Not that that's ever happened.
Yeah.
But that's why we're starting to see these surges in prices. And that's also what we're starting to see. So understanding the risk landscape and understanding where you are in an industry as it relates to the overall or the big picture of ransomware is critically important. And now I'll get off my soapbox.
No, I agree with you, Mike. And, I think the takeaway here is, if the threat actors can exact increased amount of pain on your enterprise, you should assume that you're a desirable target, specifically because they can extract that pain from you.
Absolutely. And what's the interesting one that I continue to see rise here is the targeting of state and local governments. You would think because they're not necessarily going to be subject to class action liability that they wouldn't be such a target, but they very much are. And the reason is because of all of the data that they store. And from an email perspective, and forget ransomware, if it's a business email compromise and it's coming from a .gov domain, people trust it inherently. It's going to get through all of your spam, all of your phishing filters, and the likelihood of success on phishing campaigns coming from those email addresses skyrockets.
Yeah. We really like this slide because it tells a more interesting data-driven statistical. No, you can go. You were good, Lonnie. We're good. Interesting data points for the clients that are being attacked that we're seeing. Software vulnerabilities continue to be the most common network intrusion. We've been watching the trends. I'll tell you, it used to just be like software that you think of, like your Exchange server or another application that is within your productivity suite that may have not been patched. We're now seeing VPNs that are unpatched being really desirable targets. We're seeing other parts of the network infrastructure that may not be patched or updated being targets. And so when we see software vulnerabilities on this slide, folks, we mean anything that is out of patch. The bad guys continue to leverage missed patches to get into the network. And as it relates to user actions, or as I'd put it less politely, human error actions, right? Email phishing continues to be at the top of the list. It turns out that it's really, really, really hard mathematically to break into a computer. But if I can convince Mike to open up my email with just one link or one attachment, I've done my job and I'm in the network, and someone opened the door for me instead of me having to break in. And so human error continues to be the leading loss driver of how threat actors are getting in. And then the software vulnerabilities that they're identifying are how they're either exacerbating or entering more complicated parts of the infrastructure. The two data points in the middle, Michael, I think are really interesting. 60% of the incidents exploited vulnerabilities identified in 2022 or earlier. So these are like known issues, known vulnerabilities that weren't patched, and it was still exploited. Less than 5% of the attacks that occurred were a 0-day or an unknown threat. And then the other data point that I think is interesting is nearly half of all the successful attacks are caused by stolen user credentials, right? Or reused credentials. So either phishing to get someone's username and password, or because your Facebook password is the same as your work password and it's very easy to connect the dots, they can use those passwords as well. And so having discipline around managing your phishing training, but also managing your employees' exposure to using passwords in multiple different parts of the universe are a really, really important data point on this slide.
Yeah. And David, if I can jump in there, just
Please.
A couple of things to add, because I love, and I'm a huge nerd, so I love bar graphs and I love numbers. And as soon as you start to dive into these things, again, I think they tell a really important story as we're looking from the change that we've seen from 2022 or from 2023. The fact that only 5% were using O-Day vulnerabilities, that's critical, because what that's telling you is that if you're just doing the proper patching and you're doing the identity or the identification of vulnerabilities within your system and keeping things updated, that you can block about 95% of these vulnerabilities or the 95% of the exploits that are actively being used. You can't protect against O days. You just can't. And so you shouldn't expect to, but that's where a resilience aspect of it comes in. And so I think that's critically important. And just for people to get an understanding that you can be successful against 95% of attacks simply by having good hygiene, simply by patching your systems, patching your software. The second one on here, in the second column that you called out here, where you're seeing a significant increase in the average ransom payment, what that's also showing is the sophistication of these groups, and they're going after bigger name targets. And so while we still see a lot of targets of opportunity, if your credentials are leaked on the dark web, you can believe that those credentials are going to be used to target you, and those are just going to be targets of opportunity. If usernames and passwords of your users or your admins are available and you are not actively checking the dark web for those types of things, you're opening yourself up for someone to simply log into your environment and make changes and exploit or to compromise your network. Some of the things you can do with that, multi-factor authentication, just some of the basics, and we'll get into those a little bit later. But understanding that now we're starting to see these threat actors be a little bit more targeted in what they're doing. And one of these examples, and as we move on to the third column there, we're seeing $2.7 billion lost in BECs, or you're seeing the medium ransom payment go up significantly. This tells the story of threat actors that are going after these large corporations. Think about Clorox, think about MGM Casino and Resorts, think about Change Health. These are significant companies with significant data or business operations and enormous lines of revenue, all of whom paid or resulted in more than $100 million worth of damage to each of those companies. If you let that sink in, both Clorox and MGM Casino and Resorts, that wasn't an O-Day vulnerability that caused that. That was the threat actor picking up the phone and calling the help desk and getting a username and password changed. So it's not all going to be these sophisticated cloak and dagger type threats, and being prepared and having a plan for resilience is really, really important.
Michael, just before we move on, I want to be sensitive to time, but this is, I think, an important distinction. How much of the incidents that you're seeing with your clients have a ransomware attack that was either preempted or started with a business email compromise because they wanted to see how much they could squeeze out of the email before they went in and blew the network up? Like, are they kith and kin? Are they happening at the same time? What's the trend there?
So I'm actually seeing these two as distinct lines of effort. And typically the business email compromise, the threat actors that are engaging in business email compromise, they're doing a quick smash and grab. They're trying to identify whether or not there's financial account information or credentials that they can leverage, or invoices in the account that they can send out, changing the wire instructions, changing the ACH transfer instructions, sending it directly from a trusted source to a vendor or to a customer to get them to facilitate that payment. They're not generally looking for data in the emails. Now, sometimes if they're syncing the mailbox, that creates another whole line of issues from a notification standpoint for the client, but they're not really looking for the data. Ransomware, it's all about the data or business interruption. And so they're really two different MOs.
Okay, thank you. I was just curious on that. So the goal of today's discussion definitely includes educating you all on what we're seeing in the cyber risk landscape outside of just, the ransomware threat and, the world is on fire, etc. There are other losses, there are other legal trends that are changing the way insurers, brokers, and clients are thinking about cyber risk. Intensified cyber extortion is still at the top of the list. It continues to be at the top of the list, and I suspect it will for a long time. The threat actors that are successfully deploying ransomware attacks are employing more intense and sophisticated ways of getting in, more sophisticated phishing methods to get in, and more destructive bombs, I guess, for lack of a better word, once they get in the network, so that they can exact that pain that we talked about a few slides ago to make you pay your ransom. And so ransomware continues to lead the charge on losses, but we're seeing other sort of things bubble in the background, right? Artificial intelligence is a really interesting data point to look at, only because we haven't really figured out how it's going to impact cyber risk on a wholesale level, but what we do suspect and what we are seeing is that the AI deployment is just as effective for the good guys as it is the bad guys. And so there might be a little bit of parity there in terms of how the bad guys are able to leverage AI. versus how the good guys are able to leverage AI. The only thing I've really seen AI do from a threat actor perspective is make those emails a little bit more sophisticated than the misspelled, misgrammared Nigerian Prince lottery emails, right? And so they can make emails sound a lot more organic and mimic the voice of the sender. The AI that's being used by the good guys for monitoring networks and detecting incidents and intrusions is really a win, I think, in the arc of history. I will say to all the audience members on the line today, we don't yet know how the impact of AI tools internally will have a permanent impact on the landscape. And so people are just watching right now. Insurers are watching, brokers are watching. We're asking our clients that are deeply entrenched with AI technology or developing AI technology to be sold to third parties to be able to talk about quality assurance, privacy governance, where that AI is going to be deployed, what data it's going to touch, etc. But we're not seeing any specific changes to the insurance coverage in the marketplace right now as it relates to AI. I have seen a couple of underwriters come in and say that they're offering affirmative AI endorsements. I think everyone knows my position on that, which is if it's covered under cyber tech, it should affirmatively cover artificial intelligence as well, and that is the case on all of the really good policies in the marketplace today. So if someone comes knocking at your door telling you they have an AI endorsement, ask them what it does and ask them how it works, because you might already have coverage in the policy. The privacy regulatory landscape also continues to really challenge underwriters' books. And Michael, I'm going to defer to you here as we talk about what's going on broadly across the country and around the world. But the landscape around individual states having more complex privacy laws, obviously EU GDPR was a headline grabber in the last decade. I can't believe I just said decade. And now we're moving on to state-by-state privacy regulation. How much of the support that you're offering your clients, Michael, outside of that instant response data breach perspective is just privacy mess-ups, privacy mistakes, things like that?
Yeah, quite a bit, because we're seeing a lot more litigation flow from these things. And whether it's coming from, 30-year-old laws that were drafted when Blockbuster was still around and people were actually going and renting VHSs. And yes, I remember doing this, but they're applying now the age-old laws, or some laws that are decades old, to current digital environments. And so I'm specifically talking about the Video Privacy Protection Act, or VPPA, where we're seeing an incredible amount of class action lawsuits come because people have cookie trackers, or they have certain types of trackers that are monitoring the videos on their own website and seeing what people are watching, and then keeping track of their IP addresses in order to inform marketing content. Something that was never envisioned by the drafters of that law, but now that's running afoul of certain privacy provisions. We're also seeing that in a number of others, in a number of other areas. But to suffice it to say that as more and more comprehensive privacy laws come online in the U.S. and we continue to watch this patchwork unfold, it's going to create a challenge, and it's going to create a minefield that companies need to continue to navigate, need to stay up on. And so you're asking how much of my practice is that? Well, data privacy is job security, because as long as we don't have a federal data privacy regulation or one law to rule them all in data privacy, my clients and just companies writ large are going to have somebody who's going to walk them through what is very soon to be 50 different data privacy laws.
Yeah, and also at the federal level, sort of regulatory appetite impacts how aggressive the FTC is too, right?
Absolutely.
Cool. I'm not going to go into sophisticated phishing. I think you all understand that the attackers are using really, really high-end phishing emails now. And if you're a target, like of a nation state or someone who really wants to get in, they're going to come for you specifically, and they're going to do their homework. That's a real thing that we're seeing. The last data point, I think, is one of the most important data points for the overall discussion today, folks. Your insurers, including certain members on this call today, are asking policyholders to have way more visibility into the enterprise, right? There was a point made earlier by Michael about how 95% of the vulnerabilities could have been patched if it's only 5% 0 days. That's correct. If you have the right visibility across your estate to identify out-of-patch devices, to identify devices that may have been on the edge of the network and not as closely monitored, you're going to have a way easier time trying to detect those attacks and trying to reduce the blast radius. I will tell you that all insurers who know what they're doing now are no longer underwriting to just how are you keeping people out, because every insurer knows if someone wants to get in, they're going to get in, right? And so then the question becomes, how are you picking it up? How are you detecting it? And most importantly, how are you reducing the blast radius? And that starts with absolute visibility into the enterprise, having some sort of monitoring mechanism or agent on every device connected to the network that checks for patches, that checks for anomalous behavior, that checks for provisioning of certain controls and security measures, right? And that is really what is driving down the severity of claims that are coming into the underwriter's books. Lonnie, let's give everyone on the line a little bit of a roadmap of the cyber insurance landscape, right? Like, okay, I've bought a cyber insurance policy. Who are the actors in that play? I think that's the next slide, unless my computer froze. There we go. Okay, so for those of you on the line that aren't yet buying cyber insurance, shame. But let me tell you a little bit about how the product actually works. There's 4 key players in a cyber insurance policy when the rubber hits the road and the claim happens. Obviously, there's you all on the line, the policyholder. The policyholder carries a lot of different stakeholders. You have the chief executive officer who just wants the policy to work. You have the CISO who is looking at this insurance as the last line of defense to get the network back online and get the company operational. You have a general counsel who's looking at it for privacy and defense indemnity, and then you also have the CFO or financial stakeholder that's looking at this as balance sheet protection. So the reason I mention that is the policyholder has a number of different hats within an organization, and that's part of the reason why we think at Woodruff Sawyer, and I think everyone on the line agrees here with my colleagues, it's important that every buyer understand their policy and understand the rules of how the policy works. Every insurance policy, not cyber, every insurance policy has a cooperation clause, has a duty to defend the insurer's rights, just like it defends yours, and has an obligation to do timely reporting and risk management and when the event happens. And so we always take the time to help our policyholders understand how the policy works. And that's where the broker jobs come in, right? I am the broker. Michael talks about privacy litigation being job security. For me, explaining to my clients how the policies work and also making sure that we represent them in the marketplace to get them the best coverage is what our job is. If your broker cannot explain to you what a certain term in the policy is, run for the hills. Because if you have a generalist placing coverage, if the guy who does your workers' comp is also doing your cyber, you're going to miss out on a lot of details. We'll talk a lot about what high quality insurance coverage looks like in a few minutes with Stu and James. But it's more important that you on the line today understand that cyber insurance is extremely disparate coverage. It's not regulated like an auto liability policy or a homeowner's policy. Every policy is different. The definition of computer system in every policy is different. And I think that's an important transition to the actual insurance carrier itself. The insurer is the funding mechanism for the policy. They generally determine the terms and conditions, the pricing, and the exclusions in partnership with the broker. They do a lot of work to vet the incident response panel and make sure that the vendors that are available to policyholders are high quality and competent, which is why usually the policy requires some sort of consent or a partnership with the insurer before you bring on a vendor. Sorry, your uncle who does real estate law is not an incident response attorney. That's just a fact. And so we don't want you signing up that person to manage your $500,000 ransomware claim. Right? And then lastly, you have the incident response panel, which I won't get into too much detail because it's Michael's bailiwick, but you have legal, which Michael does, and I'll explain why. And then you have the incident response vendor, which is part of Trend Micro's offering in their team, which actually manages the technology aspect of mitigating, remediating, and putting out the fire. But Michael, tell me why it's important to have a lawyer. Tell me why it matters, and tell me why every single cyber insurance policy pays for a lawyer at the outset of a claim.
Yeah,
Hey,
so
But real quick, somebody has a question.
Oh, sorry.
So Edward, I'm gonna allow you to talk to ask your question. So Edward, you can go ahead and ask your question. Oh, I need you to unmute if you're asking.
He's still muted.
Yeah. So Edward, you're muted. So if you're asking your question, we can't hear you. Otherwise, you can drop it in the chat.
Yes, drop it in the chat and I'll handle it from there. Sorry to interrupt.
All right. Okay. Mike, go ahead, please.
So I'll answer David's question and then we'll come back to Edward. Um, so why do you want an attorney? Well, naturally, because you want to work with me on a regular basis and for no other reason. Now, honestly, when it
Yeah,
comes
most of
to
your clients meet you on their best day, I would imagine.
that's exactly right. No, funny story. Whenever I introduce myself to a new client, it's always the, hey, great to meet you. Wish you were under better circumstances. But then I also give the caveat that I am meeting you on the worst day of your professional life and things are going to go up from here. So good news. No, but why you need an attorney and all of these cybersecurity incidents are not just limited to technical scope. They're not just limited to business interruption. They're not just limited to what the downtime is going to be or the ransom payment. There are significant legal liabilities that go along with any sort of cybersecurity incident because it's related to data. Anytime that there's unauthorized access or acquisition of data, there are going to be legal consequences. And whether it's the 50 individual states plus the District of Columbia and 3 outlying territories that have each an individual data breach notification law, whether it's individual state data privacy or comprehensive data privacy laws, whether it's industry specific guidance or regulations like HIPAA, or the critical or the cyber incident response for or cyber incident reporting for critical infrastructure act for any of the 16 critical infrastructure sectors. There's a maze that you essentially need to navigate from a legal perspective that's going to make sure that you are in compliance so that you don't get hit with either enforcement actions by a state attorney general or a regulator, that you can effectively navigate class action liability that's almost certain to follow whenever you have a data breach of personal information or protected health information. And then the key one, and really the key takeaway here, because if you have inside counsel, they likely could figure all of this out. But your inside counsel, it's not going to extend the attorney-client privilege over the forensic investigation and over all aspects of vendor management for incident response. You bring in outside counsel, and there's a very specific doctrine that we fall under, which is the same as if you're bringing in a forensic accountant to look through your finances in the event of a lawsuit. All the activities that are undertaken by the DFIR team, if you're doing it in anticipation of litigation, is protected by privilege. We make sure that that privilege flows. We make sure that every aspect of that incident is not going to be subject to discovery in the event of enforcement action or class action litigation.
Perfect. Thank you. Lonnie, how much time do we have? I know Michael and I have a tendency to run.
So we've got about 25 minutes.
25. Okay, so we'll keep this brief. I want to give everyone on the line a cyber insurance market update, just so that we're all level setting on what the marketplace is doing. Cyber insurance as a product has been around for 10, 15 years, maybe a little bit longer, depending on who started it and who wrote the first policy, which is always up for debate, just like who invented hummus. And so I will say that the marketplace continues to grow and mature. There is increasing interest from insurers that are trying to more sustainably, more effectively, more high quality driven underwriting for their clients, including some of our guests on the line today. So the market continues to have increasing capacity, and we get to enjoy that as we work with a number of different carriers that offer different value propositions to our clients. I will say that we've experienced price stability over the last year or so. We did see prices skyrocket in 2020, as you all remember, after the pandemic kicked off, and then SolarWinds and Microsoft Exchange and Kaseya and the whole sort of, 2020 was a rough year for cyber. The market has since calmed down since then, and we are now actually seeing stabilization. Not decreases, but stabilization. And we are seeing pricing changes that impact clients are really more reflective of the client's individual risk and not necessarily across the board mandates, which again reflects a more mature underwriting strategy, a more mature marketplace, and a more technical underwriting base. The coverages that we're seeing continue to be stable. There are limited new restrictions on coverage that we've seen in the marketplace, some of them around the war exclusion, some around privacy coverage, but generally speaking, the coverage remains extremely broad, extremely high quality, and for those clients that can demonstrate a certain level of baseline controls, we're not seeing ransomware exclusions or co-insurance or other sort of difficult terms and conditions. And that is contingent on the last column on the right, which is stringent underwriting. You're no longer able to buy cyber insurance if you're not doing a good enough job on the controls. You used to be, and it was cute in the 20 teens. Those days have come and gone. So if you cannot tell a good story around your resilience, your backups, your visibility into the network, understanding your supply chain exposures, understanding your privacy exposures, having a discussion around what you're doing for your operational technology and perhaps your sunsetted software. If you can't articulate all the different things that you're doing to manage risk across your enterprise, you're just going to be considered uninsurable these days, right? Most other clients that we work with are insurable because they have implemented all the controls that need to be implemented in order to be considered insurable, which, sneak peek, comes up in a few slides. Lonnie, I think we can go to the cyber insurance explained slide. We're not going to go into this line by line, folks. If you need to discuss this, just reach out to Lonnie, Vince, or whoever your contact is at Trend Micro, and we can have a more in-depth discussion. But this is generally an overall worldview of what cyber insurance policy should cover. It's going to cover that first-party cost, the cost to put out the fire, to hire Michael, to hire an incident response firm, to investigate the situation, understand what went wrong, perhaps provide notification to affected victims if there are any, perhaps provide credit monitoring and identity theft restoration services as needed. And then the cyber insurance policy will also cover defense and damages that will provide indemnity to you as a policyholder from third-party claims, whether that's a plaintiff's attorney, a regulator, state attorneys general, some sort of data protection commission from around the world. The policy does cover the defense costs and damages associated with those claims arising out of a data breach. Most cyber insurance policies also include first-party coverage for that interruption costs and extra expense, and generally cover that fat finger unintentional system failure coverage. What is typically not covered by a cyber policy, you're good, Lonnie, we're good, I want to be sensitive to time, are all the things that we generally think would actually make sense, right? Intentional acts, liquidated damages, bodily injury, property damage, except for bricking, right, which is generally covered, acts of war, acts of God, and insured versus insured. I'll tell you what else is important. Lost value of your own IP. We cannot insure the secret sauce of Coca-Cola. That's just a bad faith claim waiting to happen. And so it's important that everyone understand that. We also generally don't look to insure money, securities, or crypto with a cyber insurance policy, although most in the marketplace offer some social engineering fraud coverage. If you want good crime coverage, if you want broad coverage for loss or theft of money and securities, talk to your broker about an overarching crime policy that can address that as well. Lost future profits, business interruption caused by a utility, those are standard exclusions. Wear and tear, keep your server rack clean, that's not insurable by cyber, bro. And then for the media and the E&O policies, those are more professional liabilities, but they're related to business practices, trade practices, etc., where the more unsavory practices that we're seeing sometimes in the marketplace are generally not covered by cyber insurance policies. I'll make a point as to why and why it matters. Cyber insurance is a low moral hazard product. It is one of the lowest moral hazard products that we see in the executive line space because the policyholder is generally the victim. Right? They didn't intend to be attacked. No one was negligent. No one allowed for the asbestos to get into the house, right? It's a different type of discussion than other liability policies, and that's why the product performs so well. The coverage is offered through the perspective that the policyholder is a victim. Business practices, unsavory privacy practices, unsavory marketing practices are not where your cyber insurance policy is meant to respond, and those are generally uninsurable risks to begin with, and I think that's an important distinction. Lonnie, I'm good.
Okay.
Here's the promised slide that we thought would be helpful to all of you. When Michael and I talked about who's insurable and who's not, these are some of the baseline things that underwriters are now treating as pass-fail. Multi-factor authentication in place for all remote access, especially email, sensitive SaaS platforms, which is kind of new for 2025, and definitely your privileged or admin accounts. I dare say the sun is setting on SMS MFA as well, and underwriters are looking more for authenticators or other more less hackable data points and phone numbers. EDR, managed detection and response, XDR across the enterprise, around 100%. You're not even insurable if you're below 90% in terms of deploying your MDR solution. Not only that, underwriters are asking for 24/7 eyes on glass. And so this is the key risk reduction metric for blast radius management. How quickly can you pick up the intruder and how quickly can you lock him out of the network? That's what MDR does. resilience around backups, including testing your backups. I remember 10 years ago, the question was, do you have backups? You're insurable. Now the question is, where are your backups? How often do you test them? Are you using an immutable structure? Are they encrypted? Who's got the decryptor keys? Do you have a different login for your backups? The backups are oftentimes the one deciding factor between whether or not you pay a ransom or tell the threat actor to kick rocks, because you have a properly insulated and safe backup environment. And underwriters are asking for that now. Clean up your service accounts, clean up your domain. I don't want to see, and your underwriters don't want to see, a 20-year-old Konica Minolta password for a printer where the user ID is admin and the password is password. Please clean up those domain accounts and your service accounts within your privileged environments. Also, a culture of training and awareness. You are going to have to attest to your underwriters generally that you're doing some sort of training and awareness. As we mentioned earlier in the discussion, the human clicking on the link continues to be the easiest way to get in. No one wants to break the door down if all I have to do is knock nicely. Biometric exposure, in other words, the Illinois Biometric Privacy Act and collection of voice prints, fingerprints, retina scans, etc., continue to be a challenging area for underwriters. And so if you have an exposure to biometric data within your enterprise, please be able to explain how much data you're collecting, what kind of consent you're pulling, and how well you're protecting that information, because it's a huge loss driver in certain jurisdictions. And the same applies, I think, to Michael's point around some of the video privacy protection claims we're seeing in some of the wiretapping claims. Good privacy and data governance is important to be insurable now. And so we're asking our clients to be able to articulate how their controls are in place. What does their privacy policy look like? Does it reflect what you're doing with their data? And does the customer have the ability to opt out? And is that opt out actually effective? Those are important data points as well. And then finally, get rid of your tech debt. There is no appetite really anymore for a client that has 50% of their enterprise on Windows 7. Please don't do that, right? We need to figure out how to get you guys onto newer operating systems that are supported. And for those of you that have sunsetted software, unsupported software on your network, we get it. Please be able to articulate how you're protecting it. First of all, why it's there in the first place. Why do you need to have it? How it's protected, how it's monitored, are you segmenting or sandboxing it, and what your offloading strategy is. Keeping that Windows 7 server in perpetuity, no underwriter likes that answer. And then finally, regular vulnerability scanning and automatic patch deployment across at least 90% of the enterprise. I suspect that'll go to 95 or 100 over the next coming years. If you're not deploying high and critical CVE patches within 7 days of them rolling out, your underwriter's not going to like it, and you may have to have some sort of nasty clause on the policy. So patch management and vulnerability management continues to be one of the major technical controls underwriters look at. Lonnie, I just wanted to explain to the audience some of the coverage pitfalls that we're seeing in the marketplace. I just want to go on the record here and be very clear. I have a lot of faith in the cyber insurance product. I have never seen an underwriter treat my clients in a claim situation in a way that was not fair and reasonable. But it's important that you challenge your broker to make sure that you're not taking on needlessly damaging terms and conditions. There are good underwriters in the marketplace, and then there are underwriters who really want to offer fit for purpose quality coverage, and those are the underwriters that you should be getting your quotes from. You should not have any exclusions on your policy for claims arising out of unsupported software or sunsetted software. If you do, it may be more of a reflection around your risk management perspective versus the underwriter's appetite to cover the risk. You also want to make sure that you don't have any exclusions arising out of any failure to maintain a security posture declared at the point of binding. You definitely don't want to have any exclusions relating to cyber attacks related to a specific patch or security fix. Like if someone says this policy is great, except if you had that one vulnerability from 6 months ago, that's just got gotcha clause written all over it. And then you want to be careful and be thoughtful about how you're getting your privacy exposures covered. Most cyber policies do not cover those unsavory privacy practices and will have an absolute wrongful data collection exclusion where the policy doesn't respond. You want to strive for better coverage than that if it's an exposure for you. Minimally defense cost coverage and some sort of indemnity that will protect the organization from those claims. You also want to be careful about biometric exclusions if you do have biometric data in your environment. They are floating around in the marketplace. And then here's the last point. In nearly all circumstances in this country, the four walls of the policy govern the terms and conditions. It is your responsibility to understand your coverage. So therefore, there is no such thing as a dumb question for your broker. You should ask as many questions about the definitions and the exclusions and the terms and conditions within the policy that you want to ask, because I'll tell you what, when the claim comes in, that PDF is the only governing document that determines how the policy responds, and that's how the insurance law is in this country.
All right. Thank you so much, David and Michael. I'm so excited, are going to turn it over now to our friends at Invision Cyber. And Stu, I think you're going to kick us off. So, ladies and gentlemen, please welcome Invision Cyber, our new insurance partner with Trend. And Stu, please go ahead and kick it off.
We're still recovering from all those stats that Dave and Mike have thrown at us. I mean, some really interesting stuff there. And if you don't mind, guys, I might steal a bit of that as well for my own future presentations. But some of those stats were pretty scary as well. And you might ask yourself, why would a new insurer want to come into such a challenging cyber environment? I actually wrote down a phrase, Dave, you used: customers and insurers are thinking more about cyber risk and seeing different vulnerabilities. And maybe that's a really good segue into what Invision Cyber can bring that's slightly nuanced in what is now becoming quite a mature insurance market for this product, which is now about 20 years old, okay? So I'm going to talk a little bit about Lonnie, if you want to just flip over to the next slide. I first of all want to thank Lonnie and Vince for inviting Invision Cyber onto the presentation today so that we can talk about bad time, wasn't it? We can talk about what we're doing and why we're bringing our insurance product to the marketplace that is launching in the next few days. So my name is Stuart Essex. I'm the managing director and co-founder of Invision Cyber. And my background is that I have over 35 years insurance market experience in tech E&O and cyber liability, both in the UK and US markets, both in broking and underwriting. So I've been on both sides of the fence and therefore can appreciate what a customer needs within its journey. Along with that, I've got my colleague, and I won't take up too much time because I want James to show you a little bit about what we're doing. But my colleague James, as he said in the first place, is our CTO and senior underwriter. And he's helping us to bring to the market the next evolution of cyber risk assessment. And this product, most importantly, is going to be exclusive to Trend Micro customers. I can't express that enough, right? We're not opening this up to any other customers. You have to be with Trend Micro. And the Trend Micro guys have set up a cyber risk desk as well that can help you in that journey. So that's a really important point to make. So what do we do about this journey? Why did we establish it? Where are we going? Well, when we set on this journey about a year ago, we needed to establish a simple but powerful mission statement and really stick to that, not diluted in any way. And that simply, guys, was that cyber insurance should work for the customer first and the insurance market second. And it hasn't always been that way. And what has happened is that this cyber insurance has grown so quickly over the last 20 years, has morphed into this out of control beast for cyber insurers, that they've lost sight of the customer in all this process. So we set out on a journey to put the customer back into it and make them the most important part of the process. But how do we do that? We have to find key stakeholders. So we went out and found people that shared our culture. And Trend Micro, with their customer-first approach, absolutely aligned with what we were trying to do. And once we met with Vince and Lonnie and the team there, we knew that we could work together and really bring something different for their customers. And that's the important point here. Because they're world-class in what they do, they have great customers and they have great telemetry. And we'll get to that telemetry and the importance of it through the underwriting process. But it's not only, of course, about Trend. They're the most important people and their customers. We also wanted to find brokers and we wanted to find insurers, an incident response panel that also shared those cultures. And with David and with Michael, we've got people who are relentlessly customer focused. So that really aligned as well with what we're trying to do here. And, and we're not paying lip service to that, right? It's a really important point of what we do so that we can bring a slightly different, nuanced underwriting approach that really is a bit of a fresh perspective. So if Lonnie, if you want to flick to the next slide, because I want to talk a little bit about minding the gap, we say in London, or closing the gap. And this is where we talk about if we could work smarter, right? If we could be more human, if we could interact with our clients in a better way, be more aligned with your actual cyber posture via trend markets, trend micros, market leading telemetry, then we can create that customer first approach. We're not going to rely on outdated statistical data. We'll be using your own controls, commitments, and cultures that are evidenced in your telemetry. This will give us the clarity, and this will turn and give you the clarity on your risk purchase and show that actually this isn't just an insurance spend. This is real-time value being formed in the form of your balance sheet protection. I always like to talk to customers about balance sheet protection rather than let's buy a piece of paper, put it in the bottom drawer and hope we never have to use it. Well, in the cyber world, you're going to probably have to use it at some point, and we're here to give you that comfort level that you can call us and we're going to try and solve the problem for you. And that in turn provides customer experience. So we had to gather people around the table that wanted to do that for their customer and genuinely, authentically wanted to do that. And we think we can deliver that better customer experience with the other guys on this call to you. Now, underwriting, we want to turn that from risk management to enterprise risk management so that you can justify internally to CFOs, to board members, the insurance spend. You can see what you're spending relates to your customer posture, your hygiene. And that's a really important point. We've got integrated support that's going to back all this up with really top quality incident response people. And all of this is going to come from the power of Trend Micro's Vision 1 product. That is going to lend itself to the underwriting process like it's never done before. Your posture is going to make the difference. And I noticed a slide going back that Dave had that talked about more and more specific underwriting. We're going to be at the forefront of that. And the great thing is for Trend Micro customers, they're going to be at the forefront of that because they're going to help deliver with us the best product in the marketplace. It can't be done overnight, but using Trend Micro's telemetry and using Dave Anderson's knowledge and Mike's knowledge, we hope that we can bring something even better to the marketplace. Because we think the marketplace, in certain aspects, I've got a lot of respect for some of my colleagues, has lost its way a bit and has got focused on industry specifics, has got focused, I think I'm going to use Dave's phrase, board mandates that I wrote down. And I've worked insurers where there are board mandates. They don't think about the customer. They think about it in the overall liability basis. We have no historical problems. We don't have that. We have no legacy issues. We can look at your cyber posture and use that to monitor and monetize and put your premium together so that you'll feel a real connection to it. So that's what we really mean. But how do we do that? And so for that point, I am going to hand over to James, who's just going to give you a little bit of a walk through the application process.
Thanks, Stu. I'm very aware of time, so I'll try and get through this relatively quickly. I'm going to touch on our application process. One of the things anyone who's applied for cyber insurance before will be aware of is it's not something you leap out of bed for. It is quite a terrifying, miserable experience. And we've seen some right forms out there. I think the largest one I've seen is 90 pages long. So I'm sure there's lots of people on this webinar who understand the fear that goes with an application. We've tried to change that, and we've done something that we think no one else has done before, and hopefully customers will respond pretty well to it. So the first thing to say is it's purely digital. Everything is done on our website. You go onto our website, you hit apply now, and everything is done on a digital form. There is no PDFs, there's no printing off, there's no signing and scanning back in. It's all done online. The next thing is it's dynamic. So one of the problems we find with customers have with these forms is that they're not built around the customer. There's so many obsolete questions or questions that just don't apply to the customer. So what we've done, we've tried to create a dynamic questionnaire that adapts and responds to a customer's responses. So firstly, there are some key factors that will affect what the questionnaire looks like. So size, revenue, records, exposure, industry, and we hope that it'll adapt around you a little bit better than the forms you see now. The other thing about the dynamic side is that if you give what could be perceived as a negative answer, then afterwards you'll be given the opportunity to give a little bit more information and clarifying information. And a little bit like David went into earlier, there's so many key controls that an underwriter is looking for now, and quite often you're not given the opportunity to kind of explain yourself. So if you say, no, I don't have MFA for all remote access, there's never an opportunity for the but. And what our application gives you is that but. You can then go into the other controls you might have in place or any mitigating factors that you might have in place. So I think that's really important to say, that it just gives you that flexibility, and please use it as well. Use that flexibility because it really helps underwriters do the best job for you. Progress saved automatically. This isn't a one hit. You can go into the application, you can start filling it out, and then you can come back the next day, you can come back the next week. It's all saved, all your progress is saved. You don't have to do it all in one go. And the next thing is probably my favorite part of the application. It's the collaborators. We all know that the people that feed these applications don't just come from one person. The information has to be drawn from multiple sources around the organization. The benefit with this application is you can see in this kind of quite poor screenshot that I've done in the top right that there's an invite collaborators tab. All you have to do, click on it. There you go. Perfect. Thanks, Lonnie. Click on the invite collaborators, put in an email address, and then that person will be invited into your application and they can fill it out, which means you can share it with kind of your CRO, your risk officers, your CISOs, your legal, your HR, anyone you feel would need to put some input into it. So you're not alone in putting this application together. Answer what only applies. Very few of these questions are mandatory. Very, very few of them. So what I would say is the more information you give an underwriter, the better it is for you normally. An underwriter looks for evidence to try and give you the best possible terms. But if you feel like there's a question that doesn't apply to you, you can skip it, no problem at all. Lastly, add extra content. At the end, if there's anything that you feel that you can add to the application that we didn't cover, you can, yes, a good point, Lonnie. You can, if I'm running over time, there's going to be a demonstration of the application afterwards, but if you need to get away, then there's videos online as well. If you need to add extra content to the application, then you can upload files at the end of it really easily. So if you have organograms or presentations that you want us to see, you can add them to the application. One of the big powers of this is, I'm sorry to say, there's still a decent number of questions because we have to get this information. There's no other way to do it other than asking you questions. However, when you come down to renew the following year, I'm pleased to say that all you have to do is log back in and your entire application is pre-filled based on your previous year's answers. So all you have to go through, update any changes you need to make, anything that's happened over the previous year, re-sign, resubmit, and that's it. So once you've gone through that kind of process once, the following processes are so much easier. You'll be happy to know no more PDFs. And finally, I know we're very short of time now, we've got the Trend Vision 1 integration. So I'm really pleased to say that something we're doing that nobody else does is integrate directly into Trend Vision 1. And what that's going to do is give us a very limited snapshot of high-level summary data that goes alongside this questionnaire, and it gives our underwriters the ability to give you the best possible terms. So we're not delving in, we're not going in too deep, we're not looking at anything identifying like IP addresses or machine names or user accounts. It's purely high-level data like your cyber risk exposure management score. And we're using that data to help kind of go alongside the application form. And as I say, normally, on a vast majority of occasions, it's going to benefit you as the customer for us to be able to provide better terms for you. And that's a very quick go through of the application form. Do we have time to go through the demo?
Yes, I still want you to go through the demo. If you have time to stay on the call, please stay on the call. We have a couple more things to go through, but James, I'll stop sharing so you can share your screen. For those of you still on the call, James is going to run through a demo really quick of the integration within Vision One and how it feeds into the Invision Cyber application. I also want to highlight while he's pulling this up that the way that they're assessing risk is innovative. Nobody in the industry has been able to do this yet. And so this truly will be the first time that your organization will have a true, accurate picture of risk that is provided to the insurance carrier. So that security posture you have, the investments that you've made, those things can be a true reflection of what you could or will be paying on your insurance premiums moving forward. Because up until now, and we all everybody on this call likes to use the terminology that, basically you like to put your finger up in the air, which way is the wind blowing? And that's kind of like how underwriting is done today, right? They do all these external scans, those long applications, and it's giving the underwriter a semi-good picture of your risk, but not a completely accurate one. And that's what our partnership is bringing to the table for you today. All right, James, I see you've got it up, so I will turn it back over to you.
Perfect. So as you get towards the end of the application, you can see here you kind of got your progress and navigation bar. You'll come to the Vision One data page. There's only 2 inputs into this, but for now we'll leave that. Once you get to this point, you can fill this out at any point during the application, but I'm just going to quickly demo you the very quick way that you can provide us with your, what we call your Invision Insights report, which is the high-level data from Vision One. So on your Vision One page, dashboard, on the left-hand side of the navigation bar, you're going to go to Workflow and Automation. And down there, you're going to go to live third-party integration. It's worth saying that this is a live demo, which means it's guaranteed, as it's a technical live demo, not to work. So I've got my fingers crossed. But once you get into the third-party integrations, you can either scroll down and find Invision in the list, or you can use the cyber insurance filter and then click on Invision. So you get a kind of a relatively high-level bit of information about what this is and what this integration is. And when you're ready, all you have to do is click Generate. It's worth saying at the bottom here, if you want to find out more or you can't remember this from this video and you want to see it in the video again, you can also find it on the YouTube channel as well. So once you're ready, click Generate. This will bring up a slide on the right, which is opening up your API. So the name Invision is a fixed field and the role is also fixed. This role has been predefined by Trend within the system to only allow us access to this report and nothing else. That's why it's fixed. There is no change in the role. That is the role just for us. Next term, the expiration time, we only access this report once and once only during your application. There is no continuous monitoring. There is no constantly looking at your system. It's only once. So you can set this to 1 month, no problem at all, which is the lowest field. If you set it to 1 month, then within 1 month, this key will go extinct and it won't be used anymore and we won't be able to re-access. Not that we would anyway. However, if you want to, once you've kind of given us the report, you can actually go in and manually delete the API key as well. It's completely up to you. The description I find useful because it helps the other admins in your organization understand what this API is doing. So if you want to write a quick description, absolutely fine. For the CISOs on the call who are looking at this and looking at all these master administrators and having a panic, this is a demo environment, so don't worry. This isn't our live environment. And status means that the API key will be live. Once you're ready, click Add, and that will bring you up a key. It's worth saying at this point that this is the last time you'll be able to see this key. You won't be able to see it again within Vision One. So if you're not ready to use it yet, save it to a secure file and save it somewhere safe. If you are, then all you're going to do is copy it and go back to the Invision application form. Select the region you're in, which for this is the United States. Put in the key and then hit Connect API.
think it's important to note that this information is securely transmitted over to Invision. And Invision is the only organization that has access to this. So even our friend David Anderson here, who will be a broker with this, does not have access to this as well. So just to give you guys some peace of mind from the security aspect.
We don't want access to
it. Yeah, so we don't share this data with anyone else. It's purely for our underwriters. I think it's worth saying that it's only high-level data. It's only summary data. So it really is just to help give us that little bit extra to underwrite with, that the application can't capture, because we can't capture everything in an application.
I'll just, James, if I can add, I can see some of the faces from the CISOs whose faces I can't see because I can imagine them in my head already. And my response to that face is, remember, James said that this is a single snapshot in time. And so they're pulling it once, they're not pulling it again, which is important. So it's not the same thing as plugging in the Allstate dashboard thing, which I would never do because my driving is horrific. And so it's just there to get you the right pricing on the insurance. And I'll just add, as a broker, and I know Stu's going to hate me for saying this, you're actually reducing your liability for misrepresentations to the underwriter by allowing Trend Micro to tell the insurer on your behalf what's going on. So instead of having your head of HR or your chief financial officer looking at that 4-page ransomware supplement and wondering what the hell this application is asking me, you're just transmitting the data, the same data, less, I think, from what James said, as a snapshot in time, and with zero risk of an unintentional misrepresentation, which is still fair grounds for terminating coverage. That's all I have to say about that.
Thank you, David. So, James, do you have anything else you want to add?
I think that's it, and I know we're kind of short on time. So, there's plenty of information on our website, envisioncyber.com. If you want to look at more, or see that video again, it's all on there. Or please reach out to us and we can explain a little bit more about how to do it.
Yes. And then for those of you still on the call, if you are a current Trend Micro customer, and I know James probably did not say this, but if you have Trend Vision 1, Endpoint Security, and you have our Cyber Risk Exposure Management enabled, we're looking for you to be test candidates for our private preview stage of this integration. And so, please feel free to reach out to myself, Vince Kearns, or Cyber Risk Desk at trendmicro.com to let us know if you'd like to be enrolled. Basically, what we're asking is that we will sign you up, get this integration enabled in your Vision 1 console for you so you can see it, and then to walk through the application process with Invision. There is no commitment to bind the policy that you get, but we would love to see how the process is for you with the application process, show you how easy it is, and then for you, honestly, to be able to see how the Invision Cyber policy differs from the policy that you have today, right? Or what the cost is, or what the premium is, what the coverages look like. And so I invite those of you that are still left on the call to please reach out to one of us to opt you into the private preview stage to get you started. And if there are any questions, please feel free to ask those now. Otherwise, we will let you go on with your day. And I just want to thank you all so much for hanging in for this webinar. I know we're a little over, but we appreciate your time today. I hope you found this information useful. I want to thank all of our panelists today for their time today. And I just wish you all the best. Thank you so much.